Welcome to today's course, focusing on trading styles. This is the section where we are going to look at the types of traders, swing traders, day traders. So without further ado, let's jump into it.
Outline. Disclaimer, we're going to focus on trading styles, fundamental analysis, how to manage a trade, and a little bit about pattern trading. Disclaimer, be careful when trading with actual live funds. Trading is highly risky. Trading styles. There are a couple of different trading styles out there that people are utilizing on a daily basis. There are scalpers out there. So scalping is a trading style that specializes in profiting off a small price change. We're going to look at that in a second, what scalping means. Then you've got day traders. They're focusing on a little bit longer term. They might start at 9 in the morning and finish their trading at 4 in the afternoon. And you've got swing traders. Swing traders are guys with a long-term outlook. They might be swing trading by opening a position on a Monday and closing on a Friday, or they might hold on to a position for as long as a month. So you see, they are the ones that are looking at the big picture rather than very short-term moves. And we're going to see a couple of examples in a second. So let's focus on scalping for a second. A scalper is somebody that takes advantage of very fast-moving price swings on a low time frame chart. We're currently in MetaTrader looking at the US 500 or gold for that matter. And we are now going to execute an order on a 1 minute chart. So we're changing that to a 1 minute chart. And we're trying to take advantage of these fast moving prices. So we will look at the chart here and just execute a market order to buy long. So you see we have an order executed. And that also means if you've paid attention in the last session about risk management, that we need to manage our stops and take profit targets accordingly. Yeah? So this is something a scalper would do. He's scalping the markets, looking for short-term entries and exits. And you've just seen, we've just been taken into profit and we've profited from a $3.8 gain by opening a 0.1 lot. Very fast in and very fast out. Let's focus on day trading for a second. We're back on MetaTrader and we're looking at somebody that has taken advantage of intraday price movement. So we'll start with a daily chart. So every candle is a day now. Now, in order to understand how that looks intraday, let's go down to a 1 hour chart. And let's say we're opening up a trade here. Okay. So it's currently trading down here in an area of support. And we might want to be looking into trading to the upside here. We are entering a position on a 1 hour chart, dragging down our stop loss below this candle. And now we have to count and approximately calculate how long it could take to take profit. So our first take profit target would be the high of this candle here. And that's 1, 2, 3, 4, approximately 4 to 5 hours. So these are swings that are not happening very fast usually and can take a longer time to execute. Whereas on a 1 minute chart, we're scalping every price movement we see. So this is what an intraday trader would do. On to a swing trader. We've mentioned a swing trader is essentially somebody with a longer outlook. He's not trying to take profit within a day. He's not focusing on any movements within a minute. He's looking at the big picture and is waiting for price to develop over time. So he's very patient. And let's look at that for a second. Let's go on a daily chart, even on a weekly chart for that matter. So we can see every candle is a week now. And a swing trader could be somebody utilizing weeks, months, or just 1 week for that matter. So let's execute a position here and let's look at it. The price was consolidating up here, shooting a little bit to the upside, now going down. Let's make the chart a little bit smaller. And it looks like we're having an area of support down here. While we're not sure what might happen, we could be entering a sell short position right here. So we're taking a 0.1 lot like that. And we are moving our stop a little bit higher because we're flexible here. Okay. And our take profit target would be the low of this candle here. Okay. Now, this might take a longer time to develop, maybe a day, 2, 3, 4 days, but that's the time we are willing to spend as a swing trader. Yeah? Please also note, a swing trader might have a different risk profile than a scalper or an intraday trader. Yeah? This is very important to understand. He might use a larger account, but is willing to wait for longer for this trade to come to fruition. What we are showing you here are not technical examples. They do not involve technical analysis. The lot sizes that we're using, they are not being calculated. We just randomly choose an example to visualize how this would actually work on a MetaTrader account. Okay, so please take that into consideration. Anytime you're entering a trade, you got to make sure, going back to risk management and money management, to follow your plan. Calculate your 1R risk as 1% of your account. Set your stop losses. Do not move stop losses and let it go. Protect yourself. With regards to technical entries and execution, we're going to talk about that in further detail in the coming lessons. So there's a lot of content that we're actually covering. So please keep that in mind when looking at this example. Technical analysis. Again, an overview. Simply put, it's looking at past performance to predict a future outcome. Okay? It uses risk management tools like the ones we've seen in TradingView, our long and short position tool. It looks at how supply and demand affects the price. So again, these were the concepts of supply and demand, support and resistance. The use of indicators. We've also covered indicators like moving averages, the RSI, to get a foundation for their decision. And they can only be applied to an asset who has historic trading data. If there is a brand new asset out there in the market which only has 1 or 2 daily candles, that's not enough for an informed decision in technical analysis. Keep that in mind, please. Yeah? So altogether, technical analysis builds the framework of everything we've covered so far. The use of tools, looking at areas of interest, using risk management. Now, on to fundamental analysis. What's different about a person applying fundamental analysis? Technically, they are using the same tools, but in addition to that, so the fundamental analysis is measuring a security's intrinsic value by looking at economic data, financial factors, the quarterly earnings of a company. And the fundamental analyst studies anything that can affect the security's value, from macroeconomics to state of the economy, conditions within the industry, microeconomic factors like the company's effectiveness, like how's their management? Are there any bad news about this company? Right? So he uses all of that to make an informed decision. So it's very different to what technical analysis does. And this would fall into the category of somebody that is actually swing trading. Managing a trade. This is going to be one of the most interesting topics of today, and very, very important when it comes to your execution and your trade management in general. So we are going to talk about set it and forget it. We're going to talk about moving stops and partials and trailing stops. So let's start and head over to MetaTrader and look at these examples. So let's first of all focus on set it and forget it. Right on. We are back in MetaTrader. And remember, guys, there is nothing technical about this, right? We're using examples here on how to actually use the tools, how it's being executed. And let's start with a typical set it and forget it order. We're doing a market buy order for 0.1 lots here. We're moving our stops. So we're setting up our stop, let's say here, and we're putting our take profit target here, which is by simple measurement about a 1-to-1. Okay, we would walk away from the computer, making sure that we have our stop loss set or take profit target, and we walk away. Yeah? And we'll see what the outcome is when we're coming back. And I hope that makes sense. All right, guys, now on to moving stops. We are visualizing the moving of stops with a green line being our entry and the red line being our stop loss. So if we've entered the market here on this green line and the price is moving up in our favor, like so, we can now take our stop loss and move it up below this candle's wick. If the price is moving up even higher, like here, we now are able to move our stop below these wicks, which are forming some kind of support. Now that price is moving up even further, like so, we can now move our stop below this candle's wick. Remember, nothing here is based on technical fundamentals. It's to explain how the moving of stop losses work in order to trigger in more profit. So there is a big difference and a lot of more time involved when moving stops rather than using set it and forget it. You necessarily have to sit in front of your computer to manage all of these trades all the time. So make sure to pick your own poison. All right, guys, off to partials and trailing. Partials and trailing are features that are offered on a variety of platforms as well as on MetaTrader 4. So for the purpose of showing you that, let's buy a position here to market. So you can see we've been executed with a lot size of 0.1 lots. The first thing that we're going to do is we're putting in our take profit up here and our stop loss down here. We now want to modify our order, okay, and close a partial. If price is going in our direction, we're simply clicking here, modify the order, market execution, and close how much we want to close. Let's say we executed 0.1, and let's close half of our position and close half of our position to market. And here we go. You see, we went from 0.1 to 0.05. So market execution has worked. We've decreased our position size by 50%. Next on, trailing. What is trailing and what does it do? Our position is still open. We're clicking here on our entry and we're going to use a trailing stop. We're going to use a custom number and let's use around 300 points. There we go. What does that mean? Should the price of the asset go lower than 300 points, it will automatically close. So let's illustrate that. From our point of entry all the way down here, 300 points would be all the way down here. And that is because we are on a low time frame. We are on a 1 minute chart. If we're changing that to a 15-minute chart, the picture would be a little bit different. Let's look at the market here. Let's take our entry price and let's move it all the way down. Here it would be around 300 points. This is how much our position would trail. Okay? So in the likely scenario of an uptrend now, and let's use one of our nifty tools here. Let's say that price will actually be shooting up here. The trailing stop will help us to do the following. It will make sure that from the point where price currently is, should it go lower than 300 points, it will automatically close my order to market, and it will make sure that I'm taking more profit than I've initially waited for. Please proceed with caution when using all of these tools the first time. Remember, apply risk management, position sizing. Make sure you're smart about these things. Yeah? And if you have any questions about that, talk to your peers, talk to us. We're here to help when it comes to the execution. And we'll find plenty of different examples in the next courses that we can focus on. So there's a lot of content, a lot of training and exercises waiting for us. And please do not forget, when starting out with trading, use a demo account first. Open a demo, use all the features, click on everything as much as you can before risking any live funds. And as usual, please apply risk management, set a stop loss up. No trades without stop losses. Pattern traders. So what is pattern trading? It takes advantage of recurring patterns in the market. So maybe different on multiple time frames. That's very important to understand. It takes longer to execute because you need to wait for these patterns to actually play out. Yeah? The trades can be planned ahead, and it requires a lot of back testing in order to see if certain patterns are forming. So some of the most common ones we have here: double tops, double bottoms, inverse head and shoulders, falling wedges, bullish pennants, and so on. Now let's try and find a couple of head and shoulder patterns, shall we? Back on a gold chart, we're looking at a 4-hour chart, and we are trying to identify a head and shoulders pattern. What we can see here is that price has been creating a short swing high, moving down, a head and a shoulder until it finally decides to go lower. Let's have a look at some more as we can find them. Let me remove all the drawings. Let's go into the past and let's see if we can find some nice head and shoulder patterns. I see one here. This is quite nice. So we are moving up. We're having a high here, a higher high, and a lower high until price finally decides to go lower. And this is how you backtest. You make sure to analyze these patterns, to understand them, and do a lot of backtesting. While there are certainly many more patterns out there, we are mostly going to focus on market structure in order to understand the bigger picture when it comes to entering trades. And throughout the course, we'll have multiple examples on how that works. And if there is any pattern, how to use it to our advantage. With that being said, thanks for listening in, folks, and I will see you in the next one.